Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, September 19th, and wow, what a crazy day yesterday was with the Fed announcement. So we'll kind of get into that in a moment. But we do got some economic news releases scheduled for today. We got the weekly jobless claims for the and we had 294,000 applying last week. Remember, last week the data was kind of skewed due to some two states reporting new data services or new servers, which were kind of messed up with the numbers. So they counted this week because we've been kind of in the 330 range. Forecast for this week was at 338,000, and it came at 309. Again, there's some processing delays with a couple of states, so that might explain why the lower number than what the forecast is. But we could hope that that's accurate. But again, we'll kind of wait and see. Maybe next week we'll have some better data. So right now that's been kind of waved off a little bit over the last 2 weeks. We got the existing home sales for the month of August. We had 5.39 million back in July homes, and the forecast is actually supposed to decrease for the month of August, primarily because you had back to school and everything, and people getting ready to go back to school, so things usually slow down. But actually, almost 5.5 million. So great numbers so far today on existing home sales. And then we got the Philly Fed. What this is, it's the manufacturer in the Philadelphia region for the month of September. We had a 9.3 rate index for the month of August, and we're supposed to climb a little bit to 11, and it jumped all the way up to 22.3. So the Philly, the manufacturing for at least in the September month, jumped up quite a bit so far. So great numbers out of Philadelphia. And last but not least, we got the leading indicators for the month of August. This kind of helps us project as to where the economy is moving in the near future. So with a 0.5% increase in the month of July, and zero point 0.6 was the forecast for with a slight improvement for month of August, and it jumped up to 0.7. So overall, great economic data here so far today. So we're going to jump over the headline news and see what's going on here. So the stock market's a little mixed today. You think with the great economic data that came in, the Fed's announcement yesterday with basically holding off on their tapering, basically they're kind of viewing now as tapering as a tightening. So they're just not comfortable with the economy growing to where they want it to be, and they figure if they tighten out, it will only slow things down and make things worse. So they're kind of holding off, and they still haven't hit the data that they were projecting, even though a lot of economists were projecting that they're going to do some type of tapering. A few out there were kind of figuring that they'll do nothing, which I'm kind of glad to see it. So, so the stock market took off as we rejoice. Dow and S&P basically hit highs yesterday, but right now those are down. The only one's up today so far is Nasdaq a little bit. Why is it not doing so good on some of those other markets? Still the after effects of the FOMC announcement. Now, they're still kind of digesting all the information in there that was presented to them yesterday. So, and they'll have probably another day to think about it as tomorrow there is no economic news scheduled for tomorrow. So, kind of expect some volatility. They may do some more pricing, may take some money out because maybe they felt it went too much yesterday, as yesterday became a surprise to many of them, and then they came, emotionally, so they started buying, and both markets, the bond market as well as the stock market, went up yesterday. So you may see some pullback today, some corrections in there, or at least cash in some earnings right there. So let's go ahead and take a look at the bond market and see where interest rates are today. So we went up about 175 basis points yesterday. So that is an improvement of nearly 2 points. So no point earlier in the day basically came, improved 1.75% as like a rebate to them. So that's kind of great news right there. Now we started the morning up a little bit higher, but right now we're down about 19 basis points, which actually, if you look at yesterday compared to yesterday's, we're actually down about 16 basis points. So a lot of people may not have put out the full pricing in yesterday, so we could be, with today, we could be approximately about the same, or they may have, if they did price in, might be slightly worse pricing, but still great numbers compared to yesterday morning versus the afternoon. So all right, so this is something to be cautious for. We'll have to kind of wait and see if this holds. Again, there could be, they may think the emotional, maybe they pull back a little bit further to kind of read more into the future. And this could be a question: is how long is this going to come up, the tapering? So the next Fed meeting is they're going to start questioning about tapering again, and then we have mixed results in the bond market, stock market. So this could be short-lived, but we could have an improvement in here in the near term as well. Time will tell. All right, so right now rates are looking pretty good. All right, thanks for watching. I hope you guys have a great day, and we will hopefully see you guys tomorrow.